Market off to a solid start on Friday. The Sensex and the Nifty gain over 1%, each led by financials, metals, and oil and gas stocks. Mid-cap index relatively outperforms.
Adani Group stocks gain post the bulk deal trade disclosures. US-based marquee investor GQG Partners buy stake worth around $2 billion as the promoter trims holdings in 4 group companies. The stock surge anywhere between 5 to around 10%.
PSU banks see a relief rally as Adani shares rise. SBI, Bank of Baroda, PNB among top lenders to the group.
GAIL gains in trade after the Petrol and Natural Gas Regulatory Board proposes a unified pipeline tariff hike of around 41% across all pipelines. Morgan Stanley says, if approved, this would imply 25% increase in transmission revenue for the company. Hello and welcome to Chartbusters. I'm Raj D'Souza and joining me is Mangalam Malu. Well, Mangalam, it's a good start. After a while at around Chartbusters, we're trading comfortably in the green with solid gains, and we've crossed crucial levels as well. On the Nifty, we're trading well above that 200 DMA odd. We're trading above that 17,500 odd hum. And the good news is the Nifty Bank, that's about the 20 DMA. And you like the look of that. So in the first hour of trade, first 90 minutes or so, the bulls will be feeling very, very good. But as we know, it's not about the start. Let's see how this ends.
Let's see how this ends. The important part, however, is, that while crucial levels have been, taken out, we've seen a bit of a yo-yo sort of move. Day before yesterday, we had a big move. Yesterday was a day where we saw a bit of a decline as well. And while you're talking about the market, a 200-point start, it's a Friday, Nigel. We talk about the other start as well, which is taking place. Our boys, in Indore, perhaps not looking particularly good. Maybe this one goes to Australia.
Yeah, that's right, Mangalam. A little disappointing out there, but so be it, right? Yesterday, you thought we were in a bit of a chance when Pujara was putting up a fight, but unfortunately, we couldn't get to 200.
All right, let's see this. Let's go across to Manas Jaiswal, who has a quick technical check on the market as well. Manas, first star on D Street has a double century, not so much in the cricket field. And there is some conversation that was pending from last Friday. We'll have that after you talk about your individual stocks. Manas, go ahead.
Good morning, Mangalam. Good morning, Nigel. So, first thing, Nifty has definitely crossed the crucial level of 17,500, and Bank Nifty has crossed the crucial level of 40,800. So, both are definitely a good sign. I believe that even from current levels, you can see almost 200 points rally in Nifty, and Nifty can test its 20-day moving average, which is paid near 17,700. So I think one can take a chance. One should take a call on 17,600 call option, that is 29th March call option. One can take a long position over here. The target would be around 300 rupees, and here the MRP should be, I think it is trading at 190. So take a long position here. Stop loss should be around 149 and target would be around 200. So I'm quite bullish on Nifty and Bank Nifty for very short term.
Okay, good news. Manas, good morning. What about individual stocks? What are you looking at? Manas? Oopsie daisy. All right. I think we happen to lose him. I think that question, Mangalam, we're not going to get to ask him.
We're not getting to ask that question to him. He keeps, and he's always at the crucial point the minute you ask him that. But be that as it may, I mean, we will obviously get Manas sometime next week as well. And don't you worry, we will most definitely pose that question to him. Are you back with us, Manas?
Yes, I'm back.
All right, great. The lights are on as well. Manas, I think you're scared of that question. We will ask you that question. The individual stocks, what do you have for us on your list today? And before you go off again, let me also ask, there's a big MJ behind. That's obviously for Manas Jaiswal, but are you also a Michael Jackson fan by any chance?
I'm not a fan of Michael Jackson, but I definitely appreciate his work. So that is why this is Manas Jaiswal. That is, you can call it as Michael Jackson also.
I wish, you were here in the studio. We'd have definitely made you moonwalk, Manas. Just kidding. But your individual stocks, tell us.
So first one is a buy call on SBI Limited, where stock has given a fresh breakout. Stock has given a confirmation of higher tops and higher bottoms. Now stock is trading above 20-day moving average. So I think one can take a chance, take a long position here. Stop loss should be around 26.14 and target would be around 26.19 SBI Limited. And second is a buy call on PFC, where stock has given a fresh breakout. It was moving sideways, but now the stock is trading above the resistance of 150. So take a long position here. Stop loss should be around 149 and target would be around 165.
Okay, all right. And Manas has sent me a message as well. Mangalam, he says that he's not in the studio, but you're in the studio, so maybe you can do the moonwalk.
Well, there's a difference between MM and MJ. If I did the moonwalk, I think there would be more craters on the moon. So let's not do that. How about you, Nigel? Though ND, not too bad.
Later this evening. Thanks so much, Manas, for stopping by, giving us a view in the markets and a couple of stocks as well. For the time being, let's shift focus to our special segment where we get you a few ideas for profit. Jitendra Gupta of moneycontrol.com joins us to talk about a stock that is tracking rather closely. Jitendra, over to you.
Hi, I think defensive power utilities could be best bet in an environment of fear, considering that by nature, because of the cash flows, dominant position, and of course ownership and solid businesses they are relatively secure. They may not offer extraordinary gains but protect capital when the markets are adverse. We like NTPC, which fell from around 182 in November last year to currently at around 171. It is trading attractively at about 1 time its fiscal 25 estimated book value and currently offering a dividend yield of close to 5%. Moreover, business is improving during December quarter. If you look at it, reported good 34% year-on-year growth in revenue. This was led by higher capacity addition and increase in capacity utilization. In the last quarter, it added close to 630 megawatt of capacity, and its regulated equity grew by 7% on a year-on-year basis. This we think will only improve. It is executing over 18,000 megawatt of projects currently, and it plans to add 5,000 megawatt in fiscal 23 and close to 7,000 megawatt in fiscal 2024. High demand and capacity, of course, improvement in operating efficiency, lower costs, along with higher contribution from the JVs and subsidiary means higher earnings in the coming months. Further, it has plans to monetize its renewable assets, which are having a book value of close to 10,000, and I think that should support the stock.
All right, Jitendra, thanks a lot for that. We'll slip into a short break with the news that we're virtually at the high point of trade, 201 points on the Nifty, 680 on the Nifty Bank, 680 on the Sensex as well. On the other side, we have RV Gumaste, who's the managing director of Kirloskar Ferris. They will join in to detail the company's business outlook. Welcome back. As promised, let's get chatting with the management of Kirloskar Ferris. Mr. RV Gumaste joins in as always to discuss and detail their business. More importantly, let's talk about the temporary suspension of one of their mini blast furnaces in Karnataka and get a broader outlook on their business as well. Thanks a lot, Mr. Gumaste, for joining in. Always a pleasure speaking with you. The first one is obviously on the operations of the mini blast furnace in Hiriyur, Karnataka. What does it mean in terms of production lost for you, and when does it start?
It's a planned stoppage of the blast furnace in Hiriyur for refractory lining, and it's going as per schedule. We expect to start the plant by 25th, 26th of March. The project is on time, and we should start it on time. Okay. And the major thing we are looking is basically refractory lining and as a routine requirement.
Okay.
Yeah.
All right. So, Mr. Gumaste, you're saying it's routine. So, this should have been then part of your plan, right? Earlier as well, since it was a routine.
So it's part of the plan.
Okay. So, a couple of questions then on that aspect for both your businesses. For your pig iron business, what do you end the year with in terms of volumes as well as your casting business? FY23. And for FY24, casting business gets a leg up because you're going to be adding capacity out there. So, what's the volume targets on both these two for 23 and 24?
Yeah, what we are looking this year closure, as I mentioned earlier, we look for pig iron around 500,000 metric ton. There's no major change, maybe small change because of the stoppage. But otherwise, I think we stick to the 500,000 pig iron coming in, and casting we should be very close to 140,000 metric tons of sale, very close to those numbers. And on the pig iron pricing side, I think the prices have been stable for a couple of months.
Mr. Gumaste, before we get to pricing, let's just clear out the volume aspect. So this year we've got your volume targets, But for next year, from 1.4 and from 5 lakh tons, what is the target?
The pigeon will move up to almost 600,000 tons. In spite of stoppage of blast furnace 1 in Koppal for relining, most likely in the first quarter of next year.
And casting?
Moving on to the casting, we look forward to bring in another 15% growth on this current volume. I think that is the number. Maybe 160, 165 is kind of number. The customer requirement and demand is strong. I think we should be able to ramp up by 15% on the current volumes.
Okay, all right, Mr. Gumasti, on the volume aspect itself, you're adding capacity. Just wanted to ask you, demand is strong, right? It's strong enough. And also you have a fair exposure to tractors. Everyone's talking about this El Nino effect. Have you seen any slowdown from tractors clients that you have?
Yeah, last 3 to 4 months, the tractor demands are not very strong. But as you know, we have very broad customer base, and we are there in almost all types of components. And that always keeps us strong in terms of our order book position. And auto is going strong, deemed export is going strong. The commercial vehicles, especially heavy commercial vehicles, deemed export is strong. So our foundries are loaded. It's our ability to ramp up the output and productionize the line 4 or the new foundry in Solapur. That is the thing on our hand that should drive our volume for
So you're saying that tractors, there is some softness, but still you're expecting a 15% growth, right?
Overall 15%.
Okay.
All right, 15% growth. Then let's talk about ISMT. You know, what is the current production rate at ISMT for both alloy and tubes? I mean, what's the ramp up likely to be out there? And any inkling on the merger with ISMT? When does that take place?
Yeah, with respect to the volumes, we have focused, as soon as we have taken the management control, we have focused on operational aspects, efficiencies, uptimes, and we have been able to increase the output. For example, the steel from 220,000, we should be able to go towards 240,000 this year. And we are looking forward next year at least to go up to 260 or 270,000 tons. Out of that, a major quantity goes for conversion into seamless tubes in Baramat and Ahmednagar plant. We sell small quantity, which is like 70,000 tons, and hopefully we should be able to sell about 100,000 tons of steel next year.
100,000 tons of steel next year is what you're targeting? Because I remember earlier you said that the capacity for tubes would move from what, 1.6 lakh to around 2.5 lakh tons per year. That's roughly 14,000 tons per month where you are at right now. You expect it to go only up to, 100,000?
Currently, we are at around 13,500 tons per month, and we are trying to increase the output. I think what we are doing is the low-hanging fruits. We are not bringing immediately the major investments into ISMT, but debottlenecking projects we will start. But our focus, as you know, was on turnaround. Financial turnaround was very, very important. We have done major part of the turnaround. I can say that you have seen the results of last 2 quarters. We are profitable. We have increased the EBITDA levels, and we look forward to cut down the cost. We have already ordered 70 megawatt solar power plant, and we are executing already. Before the end of calendar year 2023, we want to make it operational, which will bring down our cost substantially. And after that, we will also look for whether we should further expand the solar, make it more greener powers, and also cut down the cost of power.
Okay, so the 70 megawatt plant, it will be operational by the quarter 4 of next fiscal?
Calendar year, end of this calendar year.
So by the next
quarter.
And the total savings from this will be how much?
Around 60 to 70 crores.
60 to 70 crores. Great. And also your production run rate, if I got that correct, for tubes you're at around 13,500, and for steel you're going at around 20,000 per month?
Right now around 21,000 tons per month.
Got it. And also, Mangalam, I just asked you about the merger. When does that get concluded?
Yeah, we have already started the process of merger of ISMT into KFIL. Some of the approvals are already in place. Some more are in the process. I think within next 1 or 2 quarters, we should be in a position to complete the merger, subject to, of course, the regulatory approvals.
All right. So next 1 or 2 quarters is when that takes place. What about FY24 capex? You've been talking about volume growth for the next year, etc. What's the capex that you've lined up? How much of that would be organic? You've been looking at inorganic as well.
Yeah, I think the operations are supporting with very strong cash flows, and there is always ideas and thoughts how we should keep growing KFIL. I think we are right now in a requirement of further expanding the casting capacity. We are looking at organic, inorganic options to expand casting capacity. And as you know, we have already earlier only declared that we want to make steel in Koppal plant. We would be taking up that project as well as early as possible with the environment clearance coming to us.
Okay, on the inorganic part, Mr. Gumaste, I heard from sources that you're looking at a couple of plants. That's the buzz at least. Maybe in North India. Anything you want to tell us? Where is the location?
Basically, these acquisitions, unless they are in place properly, speculating is not a right thing because the processes are sensitive, and we will have to, when it comes to the announcement, we'll come back and definitely make the necessary.
And we'll be reaching out to you as well to get any confirmation. Final question before we let you go. Tell us about what is the recent pricing on pig iron as well as on casting business very quickly before we let you go. As of today, we have got the Q3 rates. So as of today, what is it?
I think there is no major drop in the pig iron prices over the last 3-4 months, but small corrections have happened. And with that, small corrections have happened in the casting. But no major drop in the pig iron and casting prices compared to what it was 1 or 2 months back.
I was thinking
define small, 2%, 3%?
I thought it will be higher, sir, as of now, in comparison to what it was at the end of Q3. For Q3, the average was around 45,000, and for casting, it was 128 rupees. So is it a little higher than that?
No, I'm not saying it's higher. What I said is whatever this quarter price drop in pig iron and foundry is very marginal and not major.
All right. Thanks a lot, Mr. Gumaste, for joining in and giving us all those details.
Pleasure joining your show. Thank you so much.
Thanks,
Have a great day ahead. Thank you.
All right, so that was the management of Kirloskar Ferris. The stock doing fairly well this morning, up around 4% but in the last 1 year or so, as Nigel pointed out, up 74%. Take a short break, come back, any more on the markets and a lot of stocks that are buzzing around.
Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Let's focus on a couple of stocks. GAIL is in focus. Sonal joins us to tell us exactly why. Sonal?
Thank you so much for that. Well, GAIL is in focus because the regulator, PNGRB, they've gone ahead and proposed a tariff hike. That's a unified tariff hike across GAIL's pipelines to $60.92 per MMBTU. That would imply a 41% increase versus the average tariffs that the company has across the pipelines right now. Now, remember, GAIL had recently proposed an integrated tariff hike across the pipelines. They had indicated that it should be a 70% hike according to their calculations. So yes, of course, it's lower than what GAIL had proposed, but in line with what the street was working with as well. The street was working with a 40 to 50% hike. On the back of this, Morgan Stanley says that if approved, this would imply a 25% increase in transmission revenues for the company, and EPS would increase by 12 to 14% in the next year as well. But important to remember, it's just a proposal. There has to be a final decision. They have an open house on the 6th of March where they will be consulting the outcome of this paper, and that's when we'll get the final tariff amount. But yes, if it goes through, it will be a big positive for the company.
All right, thanks a lot for that. Sonal explains why GAIL is up 2.5%. But look at the market, 225 points on the Nifty. Most of the gains this morning led by the Nifty Bank, 820 points on that index, led by its front runners. We have HDFC Twins and ICICI Bank surging away as we speak. Take a short break, come back. Trading Hour comes up next.